Well, good morning and good afternoon. We want to welcome you to the broadcast. Thanks for joining. My name is John Mayfield. I'm the president of the World Council of Brokers, and we're in for a really exciting webinar today. We've got a good group of folks on. And first, I want to make sure everyone can hear me. So if you can hear me, if you want to raise your hand, I see my good friend um, Sylvia. How are you, Sylvia, doing? And I see Manuel, a good friend over near Germany, Manuel. So if you can raise your hand, or if you want to type a question, thank you. I see your hand go up. Great. All right. Thank you as well. And I see Joseph. Thanks for that. So good. We're broadcasting loud and clear. So just want to mention a couple of things before we get started. I am recording this session, so you will have a copy of this, and we will provide that in a follow-up email. We will also post that on the FIOPSI website. And of course, we want to thank Lennar Homes, and our good friend Peter from Lennar is on. Lennar's been a great sponsor and a help to the FIOPSI organization. Peter, would you like to say anything before we get started, or?
No, I think that's great. John, thanks for organizing this, and no, we're excited to be partnering with Kirsten Paul of Paul International Consultants to bring you guys this webinar today.
Great. Thank you, Peter. And I have to tell you, if we have two other webinars we've done with Lennar that are on the FIOPSI website. If you haven't had a chance to watch those, and if you haven't taken advantage of like the Lennar Showcase, Home Showcase free feature they have for us in the international real estate realm, you are really missing out on a cool tool. I have been using it, and I tell you what, Peter, I love it. And it's amazing the resources that Lennar provides the international real estate community. And so go back and watch those webinars. I'll tease you with that because you have access to just some mind-boggling free resources. I'm using them, and I'm telling you what, you guys know I'm a tech guy, but they are really cool resources, and they are absolutely free for you as a FIOPSI member. So go watch those webinars. If you have questions, we want you to feel free to type those questions in the chat box. We may wait until the end of the session to answer the questions. So if we don't get to your question right away, please don't panic. We'll make sure that we get to those questions. So we want to ask you a couple of very quick poll questions that I have for you. And the first one, I'm going to launch the poll right now, is where are you watching or listening from today? So if you will vote for that. And I tried to, they limit me on the number of places that I can actually put on the screen. So I tried to just pick the closest area toward where you are at. We'll give you a few more minutes to vote, and I'll close the poll and I'll show the results so we know exactly where everyone's watching from today. So I'm going to go ahead and close the poll. I'll share the results so you can see we have a really good mixture of folks today from Europe, Asia, Africa, and the US, Canada area. So thanks for that. One more quick poll and then we'll get started here. I just am curious if you've heard of Lennar Homes, who is our sponsor today and a great FIOPSI sponsor. And again, has some really awesome tools for you to use. So, Peter, you're going to be real happy to know that we are at 100%. So, excellent. So good. I'll close the poll out. Looks like everybody is familiar with Lennar Homes. So great, and we appreciate, Peter, you guys supporting us today. Well, let me just introduce our speaker very quickly. It's Kirsten Paul. She's the CEO of for Paul International Consultants. And Kirsten is a European banker and United States mortgage consultant. She specializes in foreign national investors, and she's been doing this for over 20 years. And she has a team of folks that really are there to help assist and consult non-residents from any countries in the world with a broad range of services when financing and investing in Florida and other parts of the U.S. So Kirsten's going to, I'm sure, tell us more about exactly what Paul International Consultants do. And Kirsten, we want to thank you so much for joining us today. And I'm going to turn it over to you.
Thank you so very much, John. Thank you very much for this great opportunity. Thank you, Peter, for making this also available. And hello, everybody. Good morning and good day, good afternoon, good evening for all the time zones that are joining us. Again, thanks for the great introduction. And John, my name is Kirsten Paul from Paul International Consultants. We are specialized in consulting and financing international home buyers and borrowers from all over the world who purchase and refinance properties within the United States with the focus on Florida. So we're doing this for a long time. We started 1994, so we're very happy to looking forward to almost a quarter of a century doing this. We work independent. That's very important. We work independent from lenders and all other service providers. So once mandated, we work in the client's sole and best interest, like their attorney, like their CPA, and look for all what is best to them in their individual scenario. We have several locations. Some of you might know us already and might have worked with us already. Our main office is located in the Frankfurt, Germany area called Aschaffenburg. That's where I'm working out, so right out of the heart of Europe. So we can reach out to the European time zone. We're available for everybody from Asia, mainland China. We have a lot of clients from over there, and also the same for the United States, Canada, and South America. We have an office in the Southwest Coast, Fort Myers, and we have an office over here in Fort Lauderdale, Coral Springs. And the next office, most possibly to be opened in the second half of 2017, will be in the Orlando area. We service or offer our services throughout the United States, but again, our home market and the focus is Florida, and that might be of very big interest for you. International buyers spent the last year more than $102 billion in U.S. real estate, $102 billion. 22% of that have been spent in Florida, so that's on place number one, followed by the state of California with 15% and 10% by Texas, and then comes New York with 4% and others. So we show that the focus is really here now, but we can serve any other state as well. We are available in different time zones, as I mentioned, and have a great portfolio of institutional and private lenders with a number of more than 100, which is constantly changing. But I would say it breaks it down to 24 lenders that we quote like on a daily basis, which have the most attractive loan programs available. And everything else beyond that is for special individual scenarios, etc. We speak, our multilingual staff. We speak several languages. Just to name a few is English, German, Spanish, Portuguese, Turkish, Mandarin, and others. So we provide documentation in 11 languages. So just let us know and we will be sure to help you so your clients and yourself feel comfortable to proceed in that transaction. This is an overview about the topics I want to introduce to you today. So first of all, what can be financed? How much can your clients borrow? What is the property value and how is it determined? Then we have second homes versus investment properties. How long is the loan term? Then what are the monthly payments? We prepared a good example with numbers for you. We have ARMs, so-called ARMs, adjustable rate mortgages versus fixed rate mortgages. We have special features about construction loans. The documentation, very important because you want to help your clients to be prepared at your best. Then loan pre-approval, that is very important as well for a good preparation before they come over and look for properties. The timeframes needed also for the contract, the necessary steps in the right order. Why use Paul International Consultants, or why using financing in the US versus paying cash or financing in the home country, and the advantages of that. So First of all, what can be financed? You see that we can offer several scenarios. The reason why we split that up over here is from all this great portfolio of lenders, not every lender offers every type of financing. Some of them only do like personal loans, just so to individuals. Others offer for companies. Some offer only for purchases or rate and term refis. So this is a good overview of what is available. The broadest range, so the biggest chance of the best parameters is a purchase. Might it be a single family residence, a townhome, condos. So this is the brightest range if you finance by the time of purchase. If you already have clients that purchased and paid cash, no problem. We can offer so-called cash out refinance. That means your clients purchased cash and want to use this equity now because they want to reinvest. They want to make more deals with you. So tell them that this is possible. They can just put a loan on the existing property and use a so-called cash out refinance and use those funds for reinvestment, or also to add a pool, to buy furniture, buy a boat, do renovations, whatsoever. So that helps you as well, so you can offer them more services and properties. We offer construction loans. We offer blanket loans. A blanket loan is a very special loan program, only quoted individually on the higher end. If you have clients, for example, that have or own or want to buy several properties that are income producing versus having one mortgage after another one, we put a blanket loan over all properties, and that blanket can be stretched or reduced with every additional purchase or sale they're doing. But again, this does not apply to every client, every scenario, and every property, so that is on individual request. And finally, we also offer, again, financing for vacant land, but only in some geographical areas. How much can your clients borrow? Again, this is an overview, and it really depends about your clients, about the geographical area, the all-over scenario. But it's a good overview for the purchase, for example, of a second home. And I will come later to what is a second home versus an investment. 70% is a good number. There are some limitations here and there, so please always inquire individually before you quote anything, because there might be geographical restrictions, so it might be 50–60% here and there, but we have a good variety of 70%. We also offer 75%, but I would encourage to stay lower because it's easier and the rates are much more attractive. Construction loans, rate and term refi. A rate and term refi is if somebody already holds a property, has it financed with a high interest rate, and wants to pay that off by using a new mortgage with a lower interest rate, which is a very good time right now. We have low interest rates available, so a lot of people are doing this. And one of, again, the most popular products right now for people that have already been invested in the US, use cash out refinance to use the equity they already have in the market. How is the property value determined? We talk about LTVs, 70%, 60%, 50% of what? If you purchase, so the basis for the loan to value is the lower of the two, purchase price versus appraised value, which means we have to get an appraisal done. This will be done by a licensed independent appraiser, property appraiser, sent by the lender. By the time the lender has the file of your client already available. The appraiser goes into the property, looks at it, and compares it to 3 to 6 different properties that have recently been sold in about a 1 mile distance in the last couple of weeks. So it should be a recent sale. It cannot be just a listing. It has to be a closed sale. And that comparison, it's called a sales comparison approach, That comparison shows what are people willed and able to pay for a comparable property here and now. So the most of the times the purchase price equals the market value, but sometimes here and there the appraised value might be lower or higher. It might be lower for the simple reason, not because it's too expensive, but right now we're experiencing increasing prices. So if the appraised or the comparable properties have been sold a couple of weeks ago or 2 or 3 months ago, prices might have increased by then, and that's why the appraisal might come in low. Well, whatever, if the appraisal comes in low, the client has to come up with additional cash or renegotiate. So because the loan amount will be based on the lower of the purchase price and the appraised value. So this is a difference that we will communicate and has to be covered by the client. But this will be, again, communicated. It's all very transparent. If you build, the LTV is going to be based on the appraisal of the land plus the building costs. So the house is being treated as if it will be already ready built. If you want to purchase, or if your client wants to purchase a house that needs renovations or adding a pool, if it's in a great location, but it's an elderly house, for example, well, then we can include all the work that has to be done in the appraisal, and it will be like a mini construction loan. So renovations that are market value relevant can be financed with that loan. If you already own property, and that is, if your client already owns property that is already paid cash or being financed, it's just simply the property value that will be based for the LTV. LTV stands for loan to value. Here now, second home versus investment property. You can, or your clients can use your property as they wish. We see that, for example, up in the Orlando area, we experience that most of the buyers, almost every buyer, is interested in rental income. So it's pure investment property. Southwest coast of Florida, for example, people do a lot of vacations. They look at the boating communities, etc. Similar or good mixture of both worlds is the Southeast coast. That's the great thing. Florida or the US can serve every need your clients might have. But the lenders are very much interested in the intended use of the property. It's the intended, not the real final use. So we will ask, as the lenders will ask, is it going to be used as a second home solely for private purposes? Is it going to be as a second home with a mix of renting it out while it's vacant, so some income can come in and the house is being lived in? Or is it a pure investment home that will be put into a rental program with the sole intention to rent it out and create income? All of this can be financed. It's just different classifications. So be upfront with us and the lender and just let us know what your clients want to do with it. How long is the loan term? Usually for most of the loans, it's going to be 30 years. You will find that your clients look at this as a long time. Nobody wants to commit themselves to financing for 30 years on a different continent. If your buyers are from Asia, from Europe, Canada, South America, wherever in the world, it's a long time. But you have some great features combined with this. Number one, the term is 30 years, so is the amortization, which means the payments are spread out over 360 months, which means the minimum payments are very low. I will show you in the upcoming sheets what that means really number-wise. And you have a great feature combined with this. Americans might be used to this, but the most nations we're dealing with do have prepayment penalty in their home country. Our lenders don't do this, just very few, and we will communicate this up front, which means there's no prepayment penalty. So you have a long term with a great amortization, low payments, but you can pay off the loan whenever you want, as much as you want, as often as you want, spontaneously, partially or in full, without your clients having to pay any penalty. That's a great flexibility, especially if we're talking about currency exchange. Let's say right now, for example, the exchange rate between the US dollar and the euro, it's almost 1-to-1. So the euro has been very much stronger in the past and had much more buying power towards the US dollar. If your clients are buying now, they are not supposed to change or exchange 100% of the purchase price for a very unattractive exchange rate just because they're buying now. All what they have to do is exchange their down payment, 30, 40, 50% plus closing costs and reserves, and they will decide by when they will exchange the other portion. That's a very great help for you to sell to your clients, and it's a very huge issue and criteria for your clients whether they will invest or not if they say, oh, the dollar is too strong right now. So just tell them, do financing. The US lenders are used to that the international buyers are paying their loans off earlier, because when the exchange rate, the liquidity, they're all over, financials or the tax situation will allow it, and it will be in their favor. Here's a good example of the available loan programs. So in the US, you have on one hand the so-called ARMs, which stands for adjustable rate mortgage, and you have the fixed rates. I would say that 98, if not 99% of all international buyers go into the ARMs, the adjustable rate mortgages. Why is that? Number one, not only that the rates are much lower than the fixed rates for international buyers, but also, did you know that regardless of what the initial intention of your buyers are or were, the average holding time of a second home or an investment home from international buyers in the in Florida, is 5 to 7 years. Even if they say, I want to move to Florida at one time, once I retire or do whatever, the average holding time is 5 to 7 years. And here we go. These 5 to 7 years are covered by a 3, 5, or 7 year ARM. So that means, let's take the golden middle, as we say. The 5-year ARM offers a fixed rate for 5 years. So no surprise in regards to interest rate adjustments or anything can occur. So the client is safe for 5 years. After 5 years, your rate may and will adjust up or down based on the market, what the market will be doing. The future rate after those initial 5 years or 7 years, for example, will be based on the index. The index will be named upfront, so the client, your client, can look it up anytime in the media, internet, wherever they want to, plus a fixed margin. The margin is fixed for the entire life of the loan. Usually for international buyers, the programs foresee a margin between 2.75 and 3.5%. We will communicate this. So the sum of those two, the index plus the margin, and the indices right now note all about the 0-point range, will be the new interest rate following their initial fixed rate time period. It's a great advantage, very great flexibility. So you have a fixed rate for the first couple of years, and whenever your clients make a partial prepayment, their rates will go down, their payments will go down as often as their rates will adjust. So first time after 36, 60, or 84 months, and then once a year. Still, in addition, there's a security, like a channel in which the interest rates can be adjusted. They call this caps. So you see here, it's a 2.6 cap, for example, which means it cannot go up or down more than 2% per adjustment, which is a very big jump, and I cannot recall experiencing that in the past, and 6% cap over the lifetime of the loan, which means 30 years. You have fixed rates, 15 and 30-year fixed rates. You can pay off this loan whenever you want to, but the rates will always remain, the payments will remain the same till the last cent has been paid off back to the lender. So the ARM has all the great advantages for your buyers, and that's what we do. But we offer them all. So regardless of what, we can offer them all. How much will the monthly payment be? So here are some numbers so you can have a good idea. So first of all, the monthly payments in most of, I would say like more than 90% of the loans, is, with the exception of some very special loan programs, the monthly payments will consist of 4 items called PITI, which stands for principal, interest, tax, and insurance. Principal and interest is clear. That's the annuity paid off to pay off your loan. And the taxes and the insurance is an escrow. Your clients will pay with every month a 1/12 of the annual real estate tax to the lender and a 1/12 of the homeowners insurance policy, which they can pick, by the way. The homeowners insurance can be picked by your clients to the lender. The lender has an own escrow account for each client. That balance will accumulate with every monthly payment. So, and by the end of the year, for example, when the real estate taxes will be due, your clients won't have to pay that. The lender will pay that. And the same applies with the insurance premium. So whenever your insurance premium needs to be renewed after 12 months, your clients won't have to pay. They will get an invoice. Don't have them pay it. The lender will do this. Okay, it's important that you inform your clients once they see their monthly payment that they can take the tax and the insurance out of their planning, out of their consideration, because it's already included in what the lender charges them. So here you see a purchase price, a good average of 400,000, financing of 260,000 for 3.5%. You have an annuity, a monthly payment for your client's loan account is $1,167.52. It's a calculable size, so you can really calculate what the payment is up to the cent. And here comes the estimate, because nobody knows now how much will be the property tax and the insurance. So that's a good guesstimate of $450 plus $250. If your client's property will be located in a community, like with Lennar, there's going to be a homeowners association or a condo association fee, which will be paid not to the lender, but they should calculate and put it into consideration. So the monthly payment towards the lender with this example is $1,867.52. Okay. I will just go over this really quick, as all the great purchases with Lennar are purchases of ready to build homes, but construction loans, they are covering some great advantages as well. You can bring in your already owned land as an equity. The lender will examine the creditworthiness also of the builders, like they do it as from the borrowers. There will be inspections during construction time, 6 times of each house, 3 times of each pool, and clients only pay interest on the draws that have been done by the builder. Here is a very important information that helps you to prepare your clients to the best. What documentation is required? It really depends on every client, on every lender, and each scenario. But there's always 3 topics that the documentation has to cover. It's called CIA, credit, income, assets. The credit is pretty simple. It is in lieu of a credit history or credit report, as American borrowers or US resident borrowers have it. They have a credit score, which international buyers don't have, because they don't have a social security number and therefore are not listed in the central credit system. So for the most loan programs, we will have to show 3 letters of reference from banks and or credit card companies, basically saying that the business relationship exists for at least 2 years and everything was fine. We provide those optional sample letters that makes it easier for you and your clients, and we even provide them in different languages so they can get it really quick. Okay. Then we have to show income for the previous 2 calendar years and the current year to date. Some lenders need tax returns, some don't. We will communicate this upfront and see what your clients can bring and want to bring. So, because I know that there are countries that don't have tax returns, and so we can work around this with using lenders that don't ask for that. In case your clients are self-employed, we work with documentations, simply reference letter from the tax accountant. We have those samples, and also the same from employer and the latest pay stub. Easy. And here comes the most interesting part of documentation. It's the asset. It can be the easiest one because everybody has bank statements, but it might also be the one that requires the largest and biggest preparation. So please talk to your clients as early as possible. They would have to show 60, in some cases 90 days bank statements of their checking account, just because the lenders want to see, who am I lending my money to? Okay, they want to see that this is a natural person going for shopping, filling in gasoline, having a phone contract, etc. They want to see what's coming in, what's going out. So they have a profile. And here now, they all want to see, where has the down payment, so the 30, 40, or 50% plus closing costs and reserve, where have the assets been in the previous 60 days? If that money was lying on that account, perfect. So there no more questions will be asked. But in only a few cases, we have the funds already lying around on a checking account because money has to work. So where's the money coming from? We experience often that for self-employed people, they're getting that out of their company. So we can use companies or business account statements. If your clients will sell property, will sell shares, any valuables like gold or an insurance will be cashed in. We had sale of racing horses, art, whatever. We saw it all. We can use that, and we just have to show it was sold, just like the contract or a confirmation by the bank, etc. But it had to be in possession in the name of the client. If your client has like cash or the money is coming from families, etc. So this is the most important point. Please advise them to put the funds as early as possible on their account. Their name has to be on the account. It has to lie there for 60 days, regardless if the account is in the US or anywhere else in the world. So tell them up front, because that will have to stay there. We have to prove the 60 days before the documentation can be sent to the lender. Okay. And again, we help with those sample letters and provide them in several languages, so that helps them. Here's a very good thing that goes right with the documentation. It's the pre-approval. A pre-approval is an official letter issued by lenders and brokers that states that based on the given information up front, the client qualifies for purchase price X and loan amount Y. So that helps you as the realtor and your clients and everybody involved in the transaction to see, number one, and the seller, by the way, helps to see that the clients have been pre-approved, they already checked on that, and that you as the realtor advising them to buy in the right price range. Maybe they can go higher, maybe they have to go lower. So please ask them to get a pre-approval. What is needed? We have a questionnaire, a very short one. It's really easy. Approximate numbers are sufficient. We need to know income, assets, liabilities, and we'll calculate based on the debt-to-income ratios from several lenders with their programs how much your clients will qualify for. We issue that within 1 business day. It's for free. Please get this. It helps you, and it's also a great psychological tool, so your clients have something in their hands showing, yeah, I qualify. I can fulfill my dream to buy property in the United States of America. So that's the first step. Please inquire about the form, and John has, and you can see it, has that inquiry form available, and we also provide this in several languages, so just let us know, please. What are the time frames needed? So for the time frame for the application, that is very important in the contract. All these time frames are negotiable. They are in the contract, so please discuss this. Lennar has very good time frames that allow good work and preparation. So, but you have to look and you have to obey. Your clients have to obey those time frames. Usually, the loan application has to be taken within 5 days after execution of the sales contract. If your clients are traveling and want to apply for the loan later on, that's fine, but they have to tell you and you have to communicate that as well. So it has been written in the contract. The finance contingency, very important. So usually 30 to 45 days will be fine. It really depends where your clients are coming from and how much time they need to get all the information on all the documentation together. We had clients that gathered all documentation within 2 or 3 business days. And we have clients that need more time because they're traveling, they're very busy, they're waiting on their banks to issue the reference letters. So just talk to your clients, have us talk to them as well, so we can determine they stay within the time frames in the binding contract. Closing date, usually 45 to 60 days. The loan process, we close deals within 3.5 weeks, but just to put the stress out of you and your clients and the lenders, foresee a loan process of 4 to 8 weeks to be on the safe side, and be absolutely assured that we and everybody else works as fast as possible. We do work very transparent. We give you a 1 week, at least once a week, an update where the loan and to the clients as well, where the loan stands, what are the next steps, what you have to be prepared for, any irregularities, etc. So the issue, the most important point here is contact us as early as possible so your clients can be informed, have a pre-approval, have calculations, and know what their options are and can prepare the documentation. Here's an overview about the order of the single steps that have to be taken. So there's initial consultation phase. That initial consultation can be like 5 minutes if the sales contract is already signed and the clients want to proceed. It can take 3 years. If your clients say, I want to buy, but I'm not sure if this is now, if it's going to be next year when I'm going to retire, or next year when I got the bonus, or next year when I sell the house. So whatever the time frame is, it's fine. So we work with you and your client's time frame for the initial consultation. Get the pre-approval as early as possible. You have to have your client sign the sales contract first. In the US, the loan application is based on an existing purchase contract. Like, for example, in Europe and some countries, we have it that you get the loan approval first and then you go shopping for a house. So you have to have a house first, because every loan approval, every check is based on a subject property that has to be specified in that purchase contract. Get the documentations together as early as possible. They should not be older than 60 days, because then we need to update them again. Once the file is fully completed, we put it into translation. We get a certified translation, and we only submit files to lenders once the file is fully completed with documentation. Because what happens, lenders won't look at them if they're not complete. They really will give them full attention. We have high priority with the lenders we're working with, so it will work really quick as possible with some lenders, but we get preferred treatment and attention because of the volumes that are coming in, and because our files are totally complete and make sense in the total order of everything that is in there. The clients will have to sign closing documents at the end once the file was approved. They can do this either when visiting the United States and go to any notary public, and they can go to any U.S. embassy in their home country. Some lenders require that clients have to be local. We will communicate this up front. For example, for clients from Asia, lenders like the clients to meet at one certain point. So it is always helpful if your clients already have like a visa to see and look at their documents and look after their properties. So just let us know what the preferences and the abilities of your clients are. Can they come? Can they not come? In other countries, for example, like Germany and other European countries, clients can go for the notarization, just to a simple notary in the home country and overnight the documents back. We explain every single page of the closing documents with them over the phone, if we can, in their own language, so they know what they sign and what they notarize and feel comfortable with everything. Once the documents are signed, notarized, and sent back to the United States, the funds will be dispersed, the monies of your clients will be due, and the funds from the lenders will be sent, and the entire deal can be closed simultaneously. Title will be transferred and everything will be done. But we will coordinate this and communicate everything so you and the seller and your buyer will be informed about the status of that. Just some of many advantages when working with us or financing also in the United States, and I will have some summarization at the very end. We work in different time zones. We do one-on-one personal consulting in different languages. So although the most people speak English, they feel much more comfortable if they can communicate about delicate information like their income, their personal financial assets, etc., in the home language. We issue the pre-approvals upfront very fast, within 1 business day. We offer sample calculations, and whoever of you worked already with us know we give a wide variety of loans available. We send fee sheets. They're all based on a worst case scenario. So we are on the conservative side. We build in cushions, and we accompany these fee sheets with explanation sheets about all the different features, pros and cons of the different loan programs that are available to your individual client and that individual scenario. But before doing this, we need that questionnaire so we have the information, understand the overall situation of the client. So the more we know, the better and more to the point and more detailed and precise we can consult you and your clients. Tell us as much as you can, and we will sort out what information will be put together and what will communicate it to the lender. We assist with the entire loan application. We help with sample letters. We analyze the documents up front. We translate them. We are in constant contact with all parties involved. We speak to the lenders daily if it's getting to the hot phase, at least weekly to you and your clients. We help open bank accounts and coordinate the entire transaction. You will find more about our services when visiting our website. Please feel free. It's available in 5 languages: German, English, Spanish, Portuguese, and Mandarin. So you'll find all this information in there. Just again, summarized the advantages for financing, for example, in the US versus paying cash or financing at home. First of all, help your clients finance. They have the widest variety of loans available if they finance by time of purchase and, if possible, the first property they purchase, because that can be claimed in most cases second home unless they are in a rental community, and they have the widest variety. If they purchase later on, that's fine, and everything can be financed, but it's going to be definitely be categorized as investment. Other parameters will apply. Even if they have funds available, help them to obtain the liquidity to buy furniture, boats, other properties in the future, and they can repay that loan once they see what the cash flow is, when rental income is coming in, if everything was paid. So just help them to keep the liquidity and have them pay it off, because they can at any time. Then we have the exchange rate. It's not only that they have now a strong dollar they have to buy into, it helps them to wait for a better exchange rate to come up. Also, if they're looking on their return on investment when they're renting out the property, they will get rental income in US dollars. If they finance, for example, in their home country, they have their financing and their loan payments in a different currency. So they will never be able to control their return on investment if the exchange rate changes. So stay within one currency, rental income in dollars, liabilities like your mortgage or the mortgage in one currency. They will start building up a credit history in case they will have one time, if they apply a social security number, they can apply the mortgage payments to their future credit history. And very important, if your clients plan to rent out the property, they will have to file income tax returns by the end of the year for the rental income. They have to. They can apply many things towards this rental income, like partially closing costs, partially interest payments, and also flights, airfare, rental cars, etc. There's a huge network of CPAs, tax accountants, and tax lawyers lined up that are specialized in advising your clients for this, and they can help to put this all together to reduce the taxable income on the rental property. Just some facts for the end. Florida has the highest percentage of foreign national home buyers in the United States. I told you this at the beginning, with an unbelievable 22% of all transactions from all the United States. International sales have grown more than 3% in the last year, and that is loan volume. On top of the reasons many look but don't buy, hopefully not after this webinar, is because they're not aware that there's an option for financing. A lot of people still advise their clients just pay cash because there is no way of financing. Yes, there is. And these are great options. So please advise them that they can get financing for whatever they're going to do in the US. And the average home price, by the way, for foreign national buyers is higher than the average home price for US citizens. That means a higher purchase price and a great way to increase your commissions as well when selling them one or maybe multiple units. So just let us know how we can help you. And that was it so far from our end. I hope that you enjoyed this and have questions for me to answer for you. Thank you very much.
Thank you, Kirsten. It was an excellent webinar and very, very informative. And we really appreciate your knowledge and wisdom. And it really kind of showed me or reminded me that when you get into these types of situations, you are better to work with someone like yourself and your company that this is what you do and you understand the process and you can make life so much simpler. My wife, bless her heart, she dropped her iPhone this week and the screen cracked and it did not fall very hard onto the ground. And so I took it to a local gentleman who repairs them, and he said the screen would be in today, and he told me the price. And then I went on Amazon to just look up, I wonder if you can buy the repair kit and do it yourself. And it sure enough, you can, and it's a lot less money. And my wife said, you have no idea what you're doing. Don't even think about that. And, I was reminded here, sometimes we want to try to go the least expensive or a different route, but you're better off to really put it in the hands of someone like you, that this is what you do and you do it day in and day out, and it can be much easier. We want to open up for any questions that may be out there. If you have some questions. Now, if you do not want to type a question in, you can raise your hand and I can unmute you, and you're welcome to ask Kirsten a question. So I can, I'm looking for any questions that you may have, or if your hand goes up, we can, again, I can unmute you and you can ask a question. So I see a question that just came in on the chat line. It says, do you provide advice to investors willing to buy income-producing commercial properties? Great question. Thank you for asking that.
Thank you very much for that question. So the question is if we advise if they want to buy income producing or
yes, for an investor who's wanting to purchase income producing commercial properties, do you assist in that type of consultation?
Great, absolute good question. We do offer financing for those type of properties, absolutely, because as I mentioned, for example, properties in the Orlando area, but also the other areas, people look more and more for their properties to produce income. So they can combine the pleasant with the useful as really have the property make money. It might be residential, it even might be strictly commercial. Yes, we offer that. We cannot offer an assist with picking these properties. We have excellent realtors available. And John, you have the greatest network available here.
That's
so,
right.
Absolutely. So that will be their side, but from the financing side, we absolutely can cover this. Yes.
Great. Thank you for that question. And also another question that came in, and it's a good question, but do you lend in all 50 states in the United States?
First of all, we don't lend. So
exactly. You work with the lenders. Yes.
Very important. Yes, we can offer, and it really depends. I can tell that the widest variety of loans available by far is the state of Florida, because the lenders know the international business. We take requests for each state. I mean, big chances, the best chances are for states where there's a lot of international business going on, as I mentioned previously. But yes, just address it right to us, please, and we will, if we cannot quote something right away, we will do the research for you and see what options we can offer you and what you can do. So absolutely.
Great. Thank you. And by the way, there are 3 different forms that Kirsten pointed out to you during the webinar. I have put the English version available right now for download in the handouts section. Unfortunately, GoToWebinar limits you on the number of handouts you can put available for download. So if you will, I'll make sure these get to FIOPC International. We'll put those on the website where you can download those, but you can always reach out. Kirsten's email address is here, and they'll be glad to send those to you if you need those in another language as well. Well, we appreciate your time. I know that you were busy, and this was just a great webinar. We appreciate so much your expertise. I do have another question that just came in. Based on your experience, what states have a higher number of Latino investors?
So far, Florida.
Okay, Florida.
Florida's number one, and we have staff available, again, Portuguese and Spanish speaking. So that is a great market that we can absolutely serve the lenders that are looking on this as a priority. So that would be the number one choice.
Great.
And one thing, if you allow me this, John, please,
Yeah.
to add for the question that we had earlier about the commercial, the income producing. If it's true commercial property, that will not be like a loan program as I presented it earlier. That is going to be individually specified depending on the property. Residential, these are programs, but let's say there's an office building, a strip mall, shopping center, etc. That really depends on each property itself. Okay. and what can be created.
Great. Excellent. And Joseph wanted to ask a question. So Joseph, I'm going to unmute you. Can you hear us okay? I don't know if Joseph has a microphone. Or you may need to. I saw he had his hand up and I unmuted you, Joseph, but so I will mute you back and I'll try to unmute you one more time. We'll see if it doesn't look like his microphone is working. So I apologize about that, Joseph. But anyway, thank you. Oh, there we go. Are you there, Joseph?
Yeah, I'm here. Can you hear me?
Yes, we can hear you. Good.
Okay. 2 quick questions. Thank you very much for this wonderful presentation.
Thank you.
During the presentation, you said average home prices for foreign nationals buyers is 40% higher than that for U.S. citizens. Why is that?
Why is that? I think they're just, I cannot tell you because that is, I cannot tell you the reason for this. That's for the statistics that's coming up. I'm pretty sure maybe because that's for income that they're looking or the hope for growth of value, or it's maybe because, and that's only speculation, Joseph, for strong borrowers, and it's the average price, that are strong enough to buy a house on a different continent. It's a different price class. If you have the US buyer spread out all over the United States, it includes all buyers from high to low. But if somebody has funds to invest into a different continent, it's already a strong segment of the buyers class. So maybe that's explaining it. But the real reason I cannot tell you, just the statistics that we have from the Realtors Association.
Okay, one last question. Thank you very much.
Yeah.
You talked about income producing residential properties in the Florida area.
Yeah.
Do you have an idea of the rate of growth over a period of about 5 to 10 years in terms of values?
Oh, I think that's more a question towards the realtors that are local that can answer this, because we are on the financing side.
Okay.
We can look up. We will be happy to look up the stats, Joseph, and communicate this for you. I cannot answer this offhand, so if you allow me a little bit to find that out and get back to you, if I may, and send you that. Okay.
Thank you very much. And you have reliable, very good realtors you work with in the Florida area that you can recommend.
Yes, we work independently, but we have a greatest network that we built over the last 20+ years. Absolutely. Let us know. And here you find, on that site, you find my email address, the info@paul-international.net. Please feel free, contact me directly. Give me as much details as you have it. And the more details I have, the more precise I can respond to you. And that will be a pleasure to present and get you all the information that you need.
Thank you very much. And John, thank you very much too.
Thank you, Joseph. I think you are my good friend Joseph from Nigeria. I think that's...
Yes, I am.
Oh, good.
Yes,
I said, I know who Joseph is. So good.
Yes.
Thank you, Joseph. Great questions. So,
thank you.
thank you. And I've muted you back. Well, listen, we want to thank you again, Kirsten. We have had some nice comments come through, and we appreciate everyone joining us today. Again, we did record this. We will put it on the website. And I just hope everyone will go out and have a great day. Peter, we want to thank Lennar International again for your support for FIOPSI and for bringing this webinar to us. And again, thanks, Kirsten, for all your knowledge and information. It was a great webinar.
Thank you very much for your time, your attention, your interest. Thank you, John. Thank you, Peter. Thank you, everybody.
Great. Thank you so much, everyone. Have a great day.